sell. There's 4 of them. Well, there's actually a lot more than 4 trades in there. You know, as we break a trade area, for argument's sake here, so we've obviously broken a stop here at 46.7. So we'll maybe offer 47.1. And it goes up to a high price of 47.5. So we've maybe offered 1s, 3s, and 5s, right? So we've maybe offered 1, 3, and 5. So we've got 3 sell arrows there, haven't we? We've potentially got 3 sell arrows all in amongst that same price area, working into that short sell. As we break structure, we're obviously now looking at this as a particular bracket measure. So that's why I drew the bracket measure on this, because of this really poor failed auction. So you can see where my bracket measure is, 49.3. So we're already aware of the 50 area. We talked about that earlier. So we're aware of 49.3. The trade goes down. It comes back up. We get +1 on the trade, right? So we get +1, okay? We get +1. The reality is that this is what happens to normal trades, right? So if we get a +1 and we go 49.3, we go 49.5, we go 49.7, and we offer those 2 prices, right? And we get filled on those 2 prices, another series of trades. So instead of 2 arrows in these 2 areas here, we've now got 6 arrows. We've now got 6 arrows in those trades. When we break a structure again here, we obviously can recognize this candle here. We can recognize the fact that when we break 48.7, we're selling 48.8s, 48.9s, 49s, those types of areas. So there's maybe 2 or 3 sells there. And it's the same with exits. As the price drops, when we touch this area here, we'll take an exit there. We'll take an exit when it goes below there. We'll take an exit when it retests there. Those types of exits there, those kind of ideas. As we break structure again, you might say, well, you know, but obviously if you're trading these individual trade entries, we know what we should be doing. Waiting for a transition so you can try and pinpoint the exact turning point on these trades. In terms of structure, you can see in the background that the baseline structure that we were using for this trade was this pink box at the bottom edge. You can see we got very close to that pink box. And again, you can see quite clearly why you would be bagging and tagging some of this loveliness in these areas. When we look at the overall shape of this, was it right to be short selling it? Well, it's the same argument that we had on the bond, isn't it? It's the exact same argument we had in bonds. The whole concept behind this short sell against the dollar. So the dollar was not the main consideration for us during that period. But the shape of the commodities line was very definitely in focus for us. That was for sure. We already had that storyline in focus. The story of real yields, divergence, divergence, divergence. Was it a guaranteed premium? Well, bearing in mind that the whole structure hadn't really improved since the way back here, so this really was a significant premium. Do we have any premium down here? No, none whatsoever. Do we have any discounts down here? Massive discounts. So a nice opportunity to buy into those discounts at those lower prices. So for me, when I'm short, I'm going to use that to exit, of course. And that means I'm probably going to miss the buy trade. Well, it is what it is, isn't it? It is what it is. So when we think about these as trade storylines, we can start to recognize some very obvious, very straightforward narratives. Being able to spot and pinpoint the time when interest rates are moving can give us some really clean, dramatic insights into certain trade movements. If we can see those dramatic trade ideas coming from things like the interest rate curve, we can start taking full advantage of them. And it was the interest rate curve that was getting me excited about the top line. And obviously, it just didn't play out. But it still made us money. That's the point I make about getting the pristine prices. Remember, the idea of trading bonds and gold, we have this interest rate curve narrative. If we look at this from an interest rate curve perspective, this is gold against the knob spread. Now, obviously, if the knob spread's steepening, as it is positive correlation here, we would expect lower interest rates. Lower interest rates, one would imagine you could come in and start buying up some gold during that period. And you got a nice 1, 2, 3 to a bottom edge here for that long trade into the cash market open. As we come up into the top edge, you can see there is a sizable divergence in value. Didn't play out because the value didn't really develop on the sell side. When we rallied, you can see we now have a guaranteed premium on these sells. So that's why we sold it. And when we rallied again, we still have a guaranteed premium in these sales, and that's why we sold it. Into the bottom edge, you can see a dramatic change in the curve, a real steepness in the curve coming in, and a very good reason to walk away from your gold short positions at that stage. Does that make sense? So, good trade overall. Like the idea. Not made a lot of money out of it, but we're making some money. And I suppose that's what's important. We're getting a nice easy stop at break even in most of these trades. And the sweep of the 1750 got down to a low price of 1745 for 500s. Sexy like a box of chocolates. Similar trade to bonds, of course. You can see the exact same trade on bonds. Sell side top edge, sell side top edge, sell side top edge. Nice exit. And a very aggressive buyer side reversal off of the low price in exactly the same way as the gold was. So similar type trade to the gold. Very similar type trade to the gold, because we're using the same measures, aren't we? We're using the same measures. If you're still long after that difference of opinion into that 3973, of course that opens the door to the possibility that this afternoon, assuming we don't get any changes to this narrative, the possibility that we could be trading and testing up towards that 4,000 wholesale again today. That's assuming we stay in the game, assuming the volatility guys stay bullish. No reason to consider that we might not get up to the 4,000. Woo! That would be a good rally, wouldn't it? Considering the bottom edge was 45. It'll give us a 55-point move higher. $2,500 per contract move higher if we get it. That'd be lovely, wouldn't it?